Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. Good to be back. I was on vacation last week. Pretty interesting week, right? Brexit and all. Well, as we always say, the pattern on the chart is a reflection of the underlying fundamentals. So it's really kind of neat to have looked at what I just did 2 weeks ago and then come back and just pick it up where we dropped off. Despite all the big news going in between. And as I said in our last report, hey, here's the Aussie dollar, our new friend. We had identified that you had a long-term bottom here, intermediate-term bottom here, and then look at that, more of a shorter-term bottom occurred right in here on the Brexit, and that proved to be just another buying opportunity. So like behavior on the longest time frame, on the daily time frame, and then almost identical retracement level on the 4-hour chart. So we still like Aussie on the upside. As we said, long Aussie is a pretty good hedge if you feel you're overexposed in your short euro or your short Swiss positions, and that's working nicely also. Here is the Aussie Chief. We highlighted this trade last time we were together, and there it is. It's quite a bit higher now. Again, there's that very popular pattern that we focus on, straight out of Dow theory, right? The two-third retracement, market bottom beautifully on there, and you're quite a bit higher now. So we love Aussie Chief on the long side here. Let me pan out to a weekly chart, and we think there's a lot of room up above. There it is, plenty of room there. And if we call the dollar Swiss the trade of the decade, I think this guy would compete for that title, trade of the decade. Love Aussie Swiss long term. We think there's plenty of room up there. You can see our initial target 85, the figure 85, even long way up to go there. Dollar Swiss, there's dollar Swiss. You can see it held long-term support there. It held that long-term trend line we talked about before. It was walking that line there. Line held. You got a pretty nice rally out of it. A little disappointed you didn't get a bigger rally out of dollar Swiss as you did in the dollar index, given the Brexit business. In fact, the Swiss had to intervene to keep dollar Swiss propped up here, to keep a lid on the Swiss franc. We like hearing that. We like that the Swiss National Bank is on the same side as the market as we are. But still, I would have thought that you could have got a little more oomph out of here off of Brexit. More weakness in Swiss franc itself, strength in dollar Swiss here. It is what it is, and really it highlights the importance of using that Australian dollar to hedge that position too. Sure, I like dollar Swiss on the upside still, but warming up to Aussie Swiss even more in the market. We just showed you long that market. I think in the long run it'll be 6 of one, half and a dozen the other, but right now I'm warming up to long Aussie Swiss more so than dollar Swiss. Still love it on the upside. Just wish we would have got a little more oomph on it. I don't know. Maybe I'm a little bit greedy here. Next market, the dollar index. There's dollar index. See, here's what I'm talking about. I love that you had a higher high here. It really cements this higher low now is a potential major bottom here. Well, I think it is a major bottom. Here's our old friend, that two-thirds level. You can see long term in the market bottom there. Love seeing that. And then you got, again, like behavior on the next higher time frame. The daily chart, you had a beautiful bottom there. And then a higher high, and that's what we look for as technical analysts. And again, it's all baked into the pattern. The pattern is absolutely a reflection of underlying fundamentals. The underlying fundamentals are telling us to buy dollars. And I think you'll see that in the next chart here, the euro. So love dollar index on the upside. It's a core position of mine. Here's the euro, and you can see it took out a significant trend line on the Brexit news. There's kind of no way to cut it here. No matter how you spin it, it doesn't look well for the euro long term. We think that that's a major break here. And really, to put this guy in perspective, you go out to a weekly chart, and you can see how shallow the rallies have been. Shorter term, they seem like big rallies in there, and they were decent enough rallies if you happen to be long at short term. On the other hand, you have a very shallow retracement overall here, and now you're breaking that trend line. Easier to see back on the daily. So the ECB wants to keep the euro propped up for sure. ECB banks need it propped up unless they're hedged up properly. But we just see more of the same here. And here you're a full week away from Brexit, and you couldn't squeeze out much of a retracement there. Kind of a dead cat bounce to date. I think you made out with a 50% retracement, which that's normal. We would look to go in there and sell it somewhere between 50 and 2/3, right? So near term, longer term, we like euro here on the short side. Gold market, hey, again, the pattern on the chart's a reflection of what's happening fundamentally. What did we say in our last report? I said, well, if you give me a couple of weekly closes above this significant level, above 13 even, I'll be on the long side of gold along with everyone else. So we were warming up to gold a couple of weeks ago, and here is your weekly chart. There's those weekly closes above it. We think gold has some upside. You got a shot there. You see a purple line up there, 1500. We think you'll see a 1500 in the gold. I'm not much on trading. Commodities, they're a little too volatile for me. I think a much better trade from my perspective is having long Aussie, short Swiss in there, in the mix. Or short Euro, long Aussie is a good trade too, and that's another one we highlighted. This is another one we all got short in class here at Trading University. Many of us were loving that trade. There it is. We highlighted this short trade here, and look at that. Look at all the downside there, and not much of a retracement at all in Euro Aussie. The only time they had some upside was actually the Brexit news, and now it gave up the gains right away. It's heading right back down. Love Euro Aussie long term on the short side, just as we love long Aussie short Swiss. Love basically long the Aussie against the European currencies. We think Australia has fantastic demographics. Aussie Swiss breaks down pretty simple to us. Here, let me put that chart up. You can really look at Switzerland as broker to Europe, broker to the Middle East, okay? And you can look at Australia as the broker to China and the broker to Asia. Going forward, who would you rather be the broker to? The Middle East and Europe or Asia? I'll take Asia every time. That's why we love long Aussie, short the Swiss. Last market we'll take a look at will be U.S. interest rates. Here's short-term rates. Look at that historic low prices we saw in 10-year treasuries off the Brexit news. It was a panic there, a flight to U.S. treasuries, flight to quality, flight to dollars. Well, U.S. treasuries denominated in U.S. dollars. Look at that. You took rates all the way down to just above 140. Let me ask you from an investor or trader standpoint here, let's take a look at this chart. Would you rather be a buyer or a seller down there at that level? Well, I don't think there's a whole lot of room left to be a seller, given rates. It's unlikely they'd go to 1%. So we think the other way. We think it'll go the other way. We think you got to see value in here. The opposite chart of this would be actual 10-year interest rates here. We'll pull up a weekly chart, and we think they're a little overextended. Would you want to be a buyer or a seller up at these historic levels? Well, I don't think I'd rather be either one, neither a buyer or a seller. B, as Ben Franklin used to say when it comes to debt. On the other hand, we think that it's awful toppy up there. We think you're going to see essentially a massive double top in place in treasuries. And the other side of that will be when it rolls lower and you start to see a normalization of interest rates in the United States. And I think the Fed will come to the conclusion, maybe not this year yet, but looking ahead, once you have the presidential election settled here in the U.S. and you get into 2017, I think the U.S. Fed will come to the conclusion that, well, we wish Europe the best, but on the other hand, we've given them a couple of years. We held off raising interest rates for the good of the global economy, but now is probably the time to start to put the U.S. economy first, which they had not done this year and the previous year. So 2017, we see higher rates for sure, potentially even towards the end of the year. That'll do it for me. Good to be back. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.